If you're using Stripe to process payments, your sales tax collection setup might be wrong. We regularly see businesses either collecting tax in states they're not registered in or not collecting where they should be. And both of these can create real problems. Stripe gives you powerful tools to handle sales tax, but it doesn't make the decisions for you because it doesn't know your business. The good news is that there's a way to resolve this. We work with businesses every day who come to us after realizing their Stripe setup isn't aligned with their actual tax obligations, which leads me to the number one issue we see with Stripe sales tax. And that issue is collecting tax in the wrong places or not using Stripe tax correctly in the first place. Let's break this down into two parts. Part one, collecting in states where you're not registered. This is way more common than you'd think. Stripe makes it easy to toggle on tax collection across multiple states. But just because you can collect in a state doesn't mean you should. And here's the key rule. You should only be collecting in states where you are registered. Because once you collect sales tax from a customer, you now have an obligation to file returns in that state, remit that tax to the state, and stay compliant going forward. So if you're collecting in a state where you're not registered, you've essentially created a liability with no way to properly fulfill it. And fixing that after the fact is not fun, it's expensive, and potentially illegal. The second part is not using Stripe tax or using it incorrectly. Some businesses are using Stripe, but not using Stripe tax at all or not configuring it properly. Instead, they might apply a flat rate manually, guess at tax rates, or collect in one or two states without really evaluating Nexus. The problem is, sales tax isn't one size fits all. Rates vary by state, city, county, and even specific product taxability. That's where Stripe tax comes in. It's designed to calculate the correct rate in real time and apply it based on location. But, and this is important, it only works correctly if you've enabled it, configured your products properly, and you've told it exactly where you should be collecting. That said, here's the right way to think about Stripe and sales tax. Step one, determine where you have Nexus. This is what drives everything. Stripe can actually help here, especially if you're using Stripe tax, which can flag where you may have triggered Nexus based on your transaction data. But that's a signal, not a decision. You still need to evaluate those states and confirm whether you actually have an obligation. Step two is to register in those states. Before you collect a single dollar of tax, you need to be registered. Step three, configure Stripe tax. Now and only now, you turn on tax collection in those specific states. Step four, keep it updated. As your business grows, your Nexus footprint changes. Stripe will continue to surface new potential Nexus states, but it's on you to act on those appropriately. But there are other very common issues we see when it comes to Stripe tax setup that you need to know. And for more information on that, click or tap on this video. And remember, when in doubt, always consult with a sales tax professional.